Welcome. We're glad you're with us. This is the Retirement Education Hour. It's Megan Mozak back in the studio with financial instructors Kirk Cassidy and Dr. Paul Metler. Kirk and Paul, they're both with the Retirement Education Foundation. And this show is brought to you by the foundation. You know, we cover a lot of great topics that relate to your retirement future, but the foundation, it goes even a step further. And they provide courses. These are like master's level courses held at major colleges and universities in your community. Throughout our program, we'll be telling you how you can reserve a spot, how you can attend, and get in the know, really become more confident about your retirement and your retirement future. And we're going to dive into this show today. I do want to give you the website. It's retirementplanningedu.org. You're welcome to visit that as you listen today, retirementplanningedu.org. But as we get into our program today, you know, it's kind of hard to ignore what's going on all around us, and that is the government shutdown. It's affecting so many areas of life, right? Especially if you're a government worker, but it's also having an effect on what people are thinking about their retirement timing, and also about what it's doing to the markets, right? The volatility there and how that could impact your retirement. So, of course, we want to dive into this today with Kirk Cassidy and Dr. Paul Metler. What's one of the biggest things people should know about this government shutdown in their retirement?
Well, I think as we start today's show, I want to make sure to remind everyone that's listening to us, you might notice a theme around our message and our education. It's not based around creating fear and anxiety and having you worried about outliving your money in retirement. And I think part of that is because we are a national charity, right? We've taught tens of thousands of people through our almost master's level 8-hour courses that are taught at major universities and colleges. We've had hundreds of thousands of people consuming our educational content, whether it's our white papers, our webinars. I think the takeaway is that this is, again, and we're going to give a lot of data around the government shutdown and market volatility, but like everything related to markets and politics, this is just a temporary event, a short-term event that should not drive literally any of your investment, financial, spending decisions throughout retirement, period. Full stop. These types of events, although this one's a government shutdown, these type of events are going to occur often throughout your retirement. And if you still have fear and anxiety and worrying about whether you can retire, if you should retire, if you're retired, if you should go on vacation, spend money around any of these short-term events that are going to consistently happen through your 30-year retirement, you have the wrong teams. You do not understand any of the risk mitigation you may or may not have throughout your plans. You need to go to an 8-hour class. That's the bottom line, so that you know how to find the right teams and how to understand the different risk mitigations and strategies to navigate these constant events that will occur throughout your retirement, Paul.
Yeah, I think it's just a great reminder. We say this all the time. It's a great reminder that, you don't want to make decisions about your retirement life based on external events, right? Whether, who's elected or whether there's a pandemic or whether the government shuts down, right? If you're in retirement, you want to live the life you want to live regardless of what's happening around you. To me, this is just another reminder of the importance of really planning for your retirement. Just another reminder. So I think, we're going to talk about the class. The class is just a great place for people to go and learn about what you need to do to plan for your retirement.
I agree, Paul. So as of today, we're about around 3 weeks into the shutdown. On record, this would be the third longest government shutdown. I think in our next segment, maybe we'll talk about how markets perform on and around government shutdowns and how they respond after. I certainly wouldn't allow any of these short-term events to drive any of your spending or retirement or financial decisions, period. End of story. So listen, the way you find freedom in retirement so that none of these types of short-term events or market volatility drives your spending decisions is by having a comprehensive retirement plan and finding the right teams. And the problem is, without attending an 8-hour course, you won't. And so this course is designed for that $1 to $20 million family. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
So, Kirk, I wanted to say something, and I'm not disagreeing with you. but I want to just add a little bent to this. Of course, I know the data, right? I know that at the end of the day, these things don't have huge impacts on, retirement, what happens in one's retirement. But it's easy to say that because every day we see true retirement plans. Imagine, though, for a moment being in the shoes of somebody who does not have a retirement plan, right? Who doesn't know that they're going to be okay, and they don't really know the future of what's going to happen under these conditions. For them, it is scary. It is nerve wracking, right? So, yes, obviously we're going to show all the data, but it does beg the point that unless you really have a plan that tells you you're going to be okay in the future, regardless of these events, it's really hard to convince people.
Can I restate that, Paul? Because I think you
Yeah,
nailed
please,
it.
please, of
But I'm going to
course.
restate one part of that.
Yes.
Because most people listening think they have a plan. And I
Right.
didn't mean to giggle, but you don't have one. Because if you are feeling that anxiety or that stress when we have an election or a market downturn or a government shutdown or any of these we know are short-term events, if you have that fear, as Paul suggests you do, and we know you do, then I know you don't have a plan and I know you don't understand your plan. The key to freedom in retirement is understanding the risk mitigation components to your plan. And I'm not talking about the annuity salespeople selling you guaranteed income for life, the insurance salesman's nonsense. No, there is risk mitigation needs to be managed by taking your income from the right sources when market is up versus when market is down. Risk mitigating a one spouse dying early, risk mitigating against a life event like a health event, a long-term care event, understanding what's really driving performance in your retirement. And it's not what you invest in. And see, that's the problem, Paul. I think people think they have a plan, but yet they still have fear. Therefore, I can tell you don't have a plan, but you certainly don't understand your plan. That is the critical aspects of our 8-hour, what is like a master's level course. Please do not get this. Do not be fooled. This is going to be a comprehensive class. I mean, we move fast and there's a lot of nuance. And you're gonna, I mean, I know we stream the classes live for people all over the country to participate when we're in the universities. But if you're local, you're gonna want to attend in person. So all we ask is a $29 donation to charity. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll continue. There's more Retirement Education Hour coming up next. And we're back. We're so glad you're with us today as we talk about the government shutdown. What does that mean for your financial future, for your retirement? Maybe you're newly retired or thinking about retiring soon. And this shutdown, it might have you second guessing some of that. We're diving into that today with financial instructors Kirk Cassidy and Dr. Paul Metler here on the program. Of course, this program brought to you by the Retirement Education Foundation. This is a charity. The mission is to help you gain confidence in your retirement through education. And to do that, they do hold courses. These are like master's level courses on retirement planning held at major colleges and universities near you, including the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, the University of Missouri, Columbia College, also on that list. Go to the website now. You can check out all of those details and get registered. Retirementplanningedu.org. That's retirementplanningedu.org, or call 800-240-8981. There's that quote, those who don't know history are doomed to repeat it. I thought it might be a good idea to go back in history a little bit, talk about previous shutdowns, kind of what came from those and maybe what that history could, inform us toward as we think about our own personal financial situations, Kirk and Paul.
Yeah, I think that's helpful. I think, and we sort of teased this last segment that we would talk a little bit about the data of this specific shutdown. And I really, really hope to, as we progress along in this show, almost use this event. This is just one of many events that you are going to experience throughout your retirement, throughout the rest of your life. Hopefully, we're gonna talk about some of those things, and then give you the data behind them, and tell you why, if you're fearful of these things, you do not have the right team or the right plan. You need education to better understand how to find the right teams and the right plans. You need to better understand what different pieces of your plan provides risk mitigation. And I'm so cautious, Paul. Every time I say this, every time I say risk mitigation, I see Golden Reserve, the Brzezinski, I see all of them just selling people annuities, right? I mean, that is so much of our industry's default is insurance people selling annuities, and they do it by creating fear. And that is not the answer, folks. That's just not the answer. That's why you need to come to an 8-hour course. But to that point, I also want to be sensitive to, and for just a minute, and then I'll throw it to you, Paul. I do want to recognize, obviously, people are impacted by the government shutdown directly and indirectly. While it should not impact any decisions related to your retirements or your money about retirement, but there are individuals being impacted. I don't want to be insensitive to that. There's for sure, we don't want to discount this, but and this is the third longest shutdown so far. The last longest shutdown was 35 days. It happened in 2018 through December 18th to January 19th. The second longest occurred. Oh, that was the last shutdown. I'm sorry. That was the last shutdown. I forgot, Paul. That last shutdown was 35 days. I
It was,
forgot that
yes.
one. And then the one before that, the second longest was 21 days back in 1995. I think that was under the Clinton administration, right?
It
I think
was,
that's,
yes.
yeah.
I think you're right.
Uh, and then I think, I think, Paul, I'm going to throw it to you, but I think the message is, and we can go through all the numbers in talking about how little it really impacts the markets. It doesn't really impact the markets much. In fact, the last one we had, Paul, the last government shutdown in 2018, that 35-day shutdown, the market rose between 10 and 13% during that period of time. The market was up over 10% during that period of time. So this is not a reason to panic around your money or your finance. It's just not. It's just not, Paul.
No, it's not. But, I think, as you're talking, I was just thinking about so what leads people, why would somebody feel anxious about this? The reality is, and this is both financial and psychological, right? The reality is when things are not in your control, whatever those things are, right, you're going to feel anxious. And that's anything in life, right? If you're facing something that you don't have a lot of control over, but potentially could have a lot of control over you, you're going to feel anxious. And whether it's a government shutdown or a market correction or a pandemic or an election, these are things that are outside of your control that lead people to be anxious. What is the antidote to feeling anxiety? Gain control. How do you gain control? Knowledge and having a plan, right? The reason why people who have true retirement plans don't flinch during these times is because they are taking back control. They're not letting these external events dictate what's happening in their life. They are taking back control because they have a plan that tells them what they're going to do when things go bad and when things are outside of their control. That is the antidote. Isn't that why we teach the class, Kirk? Isn't the goal to educate people so they have knowledge, so they can have control over their life and not let external events have control over their lives?
That is the case. And so what makes this difficult, Paul, is as we put our volunteer hats on for this charity, right? I mean, I think most people understand, Paul is he's got his degree in psychology. He is now in the financial service industry. We have a private practice, my brother and I. We're a high net worth family office. That's who we take care of. We do this charity, frankly, because of all the people that have been consumed the charity's content, I think we've helped about 10% of the people. So it is to help better prepare people to go find those teams and have this freedom. And what frustrates me more than anything, and you guys hear this theme, any of you that have been listening to our shows for a long time, and if you came to our class, you're going to learn, we try to explain the whys to our industry's behaviors and then give you the tools to understand what you should be looking for and what are the priorities you should be focusing on to be able to spend more, a lot more in retirement, a lot more. We're talking about withdrawal rates, 6, 7, 8, sometimes 9% withdrawal rates, pay significantly less taxes, and not allow any of these events to change your spending patterns. And what we're fighting against, the charity's fighting against an industry that is constantly trying to create fear, because the less you spend, the more they make, right? Remember that. Every one of you, remember, the less you spend, the longer you work and the less you spend, the more the people who take care of your money make. There is no incentive to teach you, make you feel better and more confident about your retirement. So attend one of our 8-hour classes. They're taught over 2 evenings or 1 full Saturdays. It's like a master's level course taught at major universities and colleges. We stream the classes also live as we're teaching to people in person, but for those people who are out of state who want to participate, all we ask is for a $29 donation that goes to charity. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll return with Kirk and Paul right after this. And we're glad you're with us today on the Retirement Education Hour. Megan Mozak here in the studio with Kirk Cassidy, Dr. Paul Metler, both financial instructors, and they're with the Retirement Education Foundation. Of course, the foundation's mission is to help people just like you and me get the most out of their retirement, and that starts with education, how to plan successfully for retirement so you can feel confident as you walk into this next chapter of life. And there is a lot of moving parts now in a modern retirement. The foundation knows this, and that's why we've got this great radio show where we dive into these big topics, but also these courses like master's level courses on retirement planning. We want to see you there. It's easy to get registered. Go to the website, retirementplanningedu.org. That's retirementplanningedu.org. These courses are held at the University of Michigan, Eastern Michigan University, Michigan State University, both campuses, Novi and Troy, Oakland University on that list. Also, the University of Missouri and Columbia College. So head over to that website now, retirementplanningedu.org, or call to register 800-240-8981. Talking today on the show about the government shutdown. What type of impact could that have on your retirement future or your plans to retire? This is a big topic. It does affect a lot of our listeners out there, and want to just kind of back up a little bit to talk about the emotion of all of this, because sometimes we just get hung up on the headlines, but there is a lot of emotion involved. And then that emotion sometimes overrides our better judgment, right? The heart sometimes is a little stronger than the head in this regard, isn't it?
It is. It's interesting because when we teach these classes, like, tens of thousands of people, and one of the consistent things we've heard for, we've been doing this for a decade and a half now. We hear it all the time. So this is happening. So how would you respond to this? What should we be doing? How should we be adjusting and pivoting and making changes? And what should we invest in now or invest in this? That's all nonsense, right? If you truly had a comprehensive retirement plan with the right teams, you will never, ever, ever change what you are doing based upon short-term market events. Literally, like, if you have a plan, the plan's going to say when the market is up, you're taking income from these sources. When the market is down, you're taking income from these sources. If the market is up, you're going to rebalance your portfolios this way. If the markets are down, you're going to not rebalance at all. You're touching nothing. Literally, you cannot take money out of a portfolio that's down. You have to wait for it to recover. So none of you have this. I'm telling you guys, tens of thousands of people. We've met a handful of people who had a comprehensive plan that came through it. And most of the people attending this class, by the way, are $10 to $20 million investable assets. So I am talking to you right now. I'm talking to you who said, no, I'm worth 5, 6, 7 million. I'm a sophisticated investor. I have a really great team. I'm telling you, a handful of times where we've met people who have had the right type of teams and comprehensive plans. And they're not easy to find, and you have to ask the right questions, and you have to push your teams to give you the type of planning you need. But you don't even know what to ask for. You don't even know what you should be looking for. The math drives everything, Paul, not things that are going around you. No one can stock pick market time. We know this. Here's how we know this. The data supports everything I'm telling you. And I don't know why people think they're different. The average retail investor is performing at under between 3 and 4% over the last 30 years. Paul, do you know what the S&P is? It's over 10%. In
Right.
fact, In fact, Paul, if you invested $1 million in the S&P 500 20 years ago, you'd have about $10 million in the market. You'd have $10 million saved right now. The investing part is easy, especially in retirement. And you can't allow your emotions, your team's emotions, what they feel, what they think is irrelevant. This is a math problem that will drive best outcomes and provide the greatest risk mitigation. Purely, that's it. It just requires a lot of iterating, a lot of modeling to properly get the outcomes. But you guys have to know the questions to ask and the levers to be looking for to know if you have that type of plan and to understand that plan so you don't allow your emotions to beat you when we have these short-term market events.
Yeah, I mean, we've said this, I think, twice already in the show, but I think it's just really important. I think people struggle when they listen to us and we talk about the difference between a real plan and not a real plan, and like how do we in an 8-minute segments explain what they are? And you said this earlier, and I think it's really important to state again that the best way for all of you who are listening to know whether you have what we're telling you need is if these external market events cause you a lot of anxiety and make you want to make changes, make you want to sell, make you want to do things differently, that tells us you don't have a plan. Because if you had a plan, the plan would have anticipated this and you would have strategies to deal with it. So if you're anxious today because of the government shutdown or tomorrow because some other event, then you clearly don't have a plan. I mean, we talk about data and market timing and picking. And you, Kirk, the data way better than I. But the best days, if you go back many, many years and you look at when the best days happen in the stock market, they typically happen after the worst days, right?
Yeah.
You gave the data that if you invest a certain amount, how much you would have now. My understanding is, give me the data. My understanding is if you invested $10,000 40 years ago, you'd have $1 million. If you missed the best 5 days, what do you lose, Kirk? Is it 30% of that or something?
Yeah, and you know what, Paul? I don't have the data memorized, but it's massive.
Significant. It's massive. So these
Massive.
people who are going in and out because they're anxious and they're worried and, oh my God, the market's going to crash, I better sell. That's just a formula for disaster.
But remember, Paul, that is the value proposition of most of the financial service industry, right?
I
I mean,
understand. Right.
actively managed mutual funds over the last 30 years has been performing at about 4%, while the S&P 500 is at 10%. 95% of the time, over any 10-year period of time, your actively managed mutual funds and your fund managers, people managing money, 95% of the time are getting beaten by the S&P 500. There's no secret sauce to investing. There's no algorithm. There's no market timing to be had. The best days are in the markets are after the worst days. 78% of the best days in the market occur during bear market events. It is crazy to believe you can time this stuff. So the next segment we're going to talk about all the different how frequently major market events are going to occur throughout retirement so that you recognize no one can manage around that. You need a plan that already anticipates these major market events. So please attend one of our 8-hour courses. If you'd like to attend, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be back right after this. And we're back. Glad you're here with us today. This is the Retirement Education Hour. Megan Mozak alongside Kirk Cassidy and Dr. Paul Metler, financial instructors with the Retirement Education Foundation. We've been telling you about the foundation's courses. These are like master's level courses on retirement planning. And Kirk and Dr. Paul Metler, they both teach these along with the other instructors there. And you have a chance to meet both of them or many of the other instructors when you register. We want to see you there. This is just a great opportunity to gain more confidence. If you're looking at the prospect of retirement, maybe you're newly retired and you're feeling like, there's probably a lot more I need to know to really feel like I can enjoy this retirement. The course is a great place to start. And here's where you go to get registered. Simply go to retirementplanningedu.org. That's retirementplanningedu.org. or you can call to register 800-240-8981. We've been talking on the show today about the government shutdown and how this can drive emotions and how it can really set us up to potentially make some poor decisions in the wake of uncertainty. I want to talk to you, Kirk and Paul, about some of these other events, right? I know there have been other impacts to the market. What are some of those notable times that you remember the market dropping?
So, Megan, a couple things here. I'm hoping that I can convince anyone that's listening right now to stick around into the last segment. Because what I'd like to do over the next couple of segments is talk about some of the data around major market events, what is common to occur throughout the markets on any given year, and all of the variables that you're going to have to manage and navigate through your retirement. And there's a lot. There's a lot more than people realize. And so those of you, so the last segment, we're going to talk about the solutions and what drives a successful retirement plan and team. The point is, as I go through all of these data points, Paul and I go through this. It's not, let me just get through this next event and I'll be okay. You're going to have constant events. And if you're feeling anxious, if you have anxiety, if you change your spending patterns, if we had a major market event this year like we had in 2022 and your 401k was down over 20% and you don't retire as you were supposed to, if you're going to retire this year, then you do not have a plan. You don't have the right teams. The point is, these aren't going to go away. And you can't allow these things to impact your spending patterns and decisions. That's how you make massive mistakes. And that's how the financial service industry, frankly, wins. That's what that fear, they want you to be afraid of inflation. They want you to fear of outliving your money. Protect your principal at all costs. If we have a bad market event, just spend less money that year. This is nonsense. The less you spend, the more they make. That's what they want you to do. They have no incentive to build you a comprehensive retirement plan. You have to force them to, and you need to know exactly what to ask for. So here's my point. On any given year, since 1980, we have experienced on average a 14% loss in any given year. So let me say it again. Since 1980 through today, on average, the S&P 500 will be down 14%. We call this a drawdown from its peak to its valley. So on average, the market's going to go down about 14% over the last 40 years, all right, per year at some point. Now, of the 22 years we've experienced those double-digit drawdowns in the 40 years, 14 of the years the markets ended up. They did great. So the challenge is we are always going to have volatility, and we can expect a double-digit drawdown typically in any given year. So this is why the 4% rule exists. This is why people tell you to spend 3 or 4%, because no one wants to build a comprehensive retirement plan to navigate that market volatility. Because remember, your money is going to be going up and down with the markets while you're withdrawing money out of it to live on. That is the variable that's different from when you were younger. You've retired, now you need income. The government's going to force you to take your required minimum distributions. You're going to take those dollars, most of you, on a monthly basis, as you should, to live on. And while you're taking that income, the market's going to go up, it's going to go down. On average, we're going to have a double-digit drawdown on average every year. And it's not every year, but the average drawdown is about 14% over the last 40 per year over the last 40 plus years. So the secret to this is managing. This is what we call sequence of returns risk, by the way. It's the number one risk to your retirement. Someone has to build you a comprehensive plan to manage this specific thing. When the market is down, you cannot be pulling money out of those accounts. When your portfolios are down, you cannot take money out of those accounts, nor can you rebalance your portfolios. You can't rebalance, sell anything when your portfolio's down. So therefore, a proper plan is going to have a place to take your income from when the market is up and a different place to take it from when the markets are down. This is not just go buy an annuity and because fun fact, 96% of people who buy annuities lose to the insurance company. All right. So I'm not just saying all annuities are bad. I'm just telling you 96% of you will lose because no one built you a plan to determine when you should use it. So you're going to have these major market events, Paul, And the funny thing is 73% of the time, 74% of the time, the market's going to be up at the end of the year. It's a non-issue as long as you're taking your income from the right places. Now, if you do this effectively, Paul, and I know I took this whole segment, I'm sorry, but they can take withdrawal rates of 7, 8, maybe 9% when they retire instead of the 4%. But if you do that, your advisors and people managing your money are going to make less money. So why would they teach you to do that, Paul?
There's no incentive at all, right? There's no incentive. I'm listening to the data. It was a lot, by the way, just to let you know. It was a lot of data. And as I was listening to, I'm thinking, what you're saying basically is 14 out of the 22 times that the market has gone down 14% during the year came back and was positive, which is
Yep.
good news, right? I mean, you think, why do you worry? But that also means 8 times it wasn't positive, right? So it's sort of a double-edged sword in a way. I mean, it's just at the end of the day, it really begs the importance of making sure that when it's down, we're managing sequence risk. And if you come to the class, we'll teach you about what that is and the best strategies to manage that.
I love the example we show in the class, Paul, where we have two people retiring with the same amount of money, taking the same withdrawal rates in the same portfolio. And the only difference is one retired 1 year earlier than the other. The one that retired 1 year earlier ran out of money at 85. The one that retired 1 year later had $1.2 million at 95 years old when they died. It's that drastic managing sequence of returns. So come back for the next segment. We're going to talk more about some data. In the last segment, we're going to teach you some solutions. So if you'd like to attend one of these 8-hour classes, I'm begging you to attend one of these 8-hour classes. Go to retirementplanningedu.org. That's retirementplanningedu.org.
We'll be back. There's more with Kirk and Paul right after this. This is the Retirement Education Hour. Today, we're talking about the government shutdown. How could that affect you and your plans for retirement? We're talking about that today with financial instructors Kirk Cassidy and Dr. Paul Metler on the program. You have a chance to meet instructors like Kirk and Paul at the Retirement Education Foundation's courses on retirement planning. And these courses, they really go deep into the topic of planning for your retirement. They're held at major colleges and universities. These are really like master's level courses. We want to see you there. Go to the website for more information and to register, retirementplanningedu.org. That's retirementplanningedu.org. The courses are held at the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, the University of Missouri, and Columbia College. Again, go to retirementplanningedu.org or call 800-240-8981. All right, Kirk and Paul. So as we think about these downturns in the market, right, and when you get news that the government is shut down, well, that can impact the market. But how do we know if something is coming our way? And how do we know how long it might last? What are the telltale signs?
So this is great, Megan. People get overwhelmed when we're just throwing data at them, and that's what we're doing a lot today. And so I'm going to give you more. I want to give you more data so you understand how common major events are going to occur throughout your retirement. And so the reason we're telling you this, it's really almost like it's a rhetorical question. How are you going to respond? And what is your plan? And if you are answering yourself that you're going to, when we have major events occur, I'm going to spend less, or I will change, I won't go on vacation, or I might sell something and go to cash, or I might go buy an annuity because we're having a major market event, because that's what the annuity salespeople are going to try to get you to do. Or you're not going to retire if it happens to be during a major market event. Or if you're not going to buy your dream home, or you're not going to do your remodel, or not get the house ready for you to age in, that all of those things, those answers in your own head should tell you you don't have a team that's helping you. The team is supposed to be coaching you and making you feel confident that you don't have to worry about any of those things. They've got you. So you don't have the team, and I know you don't have the plan. And if you have a plan, you certainly don't understand the risk mitigation strategies built into it. And I'm going to tell you don't have a plan because you don't know what to ask for. And if you don't ask for the right things in a retirement plan and you just let them do what they want to do, there is no incentive for them to put the 40, 50 hours it's going to take to build you a plan. They're just not going to do it. You need to know what to be asking for you 1 to 10, $1 to $20 million families. Because here's the deal. We're going to have 8 major market events throughout your 25 to 30-year retirement. 8 major market events. You're going to have a recession on average every 5 to 7 years. Now, the good news is when we have these major market events, they typically last 9 to 12 months. And when we have a major recession, the markets usually recover within 1.5 years. So how do we behave? These are temperate. You're going to have an election every 4 years. We're going to have geopolitical issues. How are you going to react? How are you going to behave? It cannot be, I'm going to wait for things to get better before I do these things in retirement as I'm aging and more likely to get sick and be unable to do these things. There is no waiting in retirement, Paul. There's none.
Yeah, no, I think, I love what you said. And I thought it was really well said that the reality is these things are going to happen throughout your life. And, if you react to them negatively by making decisions out of fear and anxiety, all you're going to do is hurt yourself. As you're talking, I was thinking about something my father once said. I hope this doesn't take us up. I just have to say it. I remember in the 70s, I think it was the oil embargo maybe. And I remember sitting in a room with him and I remember someone saying to him, oh my God, like this is the end of the world. Like this is it. And I remember my dad saying, you know what? We always think it's the end of the world. It's not the end of the world, but it's going to happen all the time. And I remember thinking that's so interesting. And I think that is the reality. There's always going to be events in our lives. It's not like, oh, the pandemic over, we'll never have one. Or, oh, we had a recession. There's going to be all these different events in your life. And it's going to be very hard for you to navigate those without being emotional unless you have a team of people that help coach you through it, because you can't do it on your own. And even if you think you can, when you're in your 70s, your ability to navigate is going to be more challenging. When you're in your 80s, very challenging. So many opportunities for mistake. So there's going to be these events, as you said, Kirk, multiple times in our lives, in our retirement. And we want to make sure that we don't react poorly, because if we do, it really can cause problems.
So your father-in-law was that smart, huh?
Not my father-in-law.
Who was it?
My father.
Oh,
Not
your father.
Norbert.
We different father, same mother. Your father.
That's right.
We are brothers. Different father, same mother.
That's right. It was during the oil embargo, and I remember him saying, thinking, "Wow."
You just gave your age away, by the way. That was the early 70s.
I didn't say I was 2 years old. I was that intuitive at 2 years old.
You were born that intuitive. That's amazing.
Amazing.
But it's interesting as I listen to people, like, whether it's Trump or it's Biden or it's the pandemic or it's the Great Recession, like the financial crisis. I mean, Americans have short memories, but that was probably the most massive of all of them, right? And so we survived it, and in modern times, we could go back to the Great Depression. We could go back to some of the wars, of course. We've had more dramatic than that, but in recent times. But here's the deal. Like, if it's that bad and the end of the world's really happening, it doesn't really matter what you're doing with your money. Your gold in the vault isn't going to help you. That's for sure. Your Bitcoin, what's going to help you? If it's that bad, the internet's down. It's just irrational. And if you still have these fears, I hear this with DIYers a lot that come to our classes. I need to control. What control you? 8 major market events is what you're going to have in a 25, 30-year retirement. There is no control during those major market events. You don't have, that is a figment of your imagination. Control, as we know, some people in their 70s will have measurable cognitive decline. 35 to 40% of people in their 70s will have measurable cognitive decline. Yet they are in control during a major market external event they have no control over. It's crazy nonsense. Gain control through education, understanding the levers that are going to drive success to help risk mitigate these issues so that you don't have to ever change your spending patterns and you can spend more, pay less taxes, and have less fear. Attend an 8-hour, almost master level course that's taught at major universities and colleges in your areas. And we stream them live if they're not in your areas. So if you'd like to attend, we ask for a $29 donation of charity. Go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be back with Kirk and Paul right after this. Glad you're with us for the Retirement Education Hour. Today we're talking about the government shutdown and what that means to your retirement plans. Kirk Cassidy and Dr. Paul Metler are here to help us have that discussion, and they are financial instructors with the Retirement Education Foundation. Of course, the foundation does sponsor this very program, and then they go a step deeper. They also hold courses. These courses are like master's level courses on retirement planning, and they're held right near you at major colleges and universities. And those include the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, the University of Missouri, and Columbia College. And you can get registered today. Reserve your spot. Go to the website, retirementplanningedu.org. You can go there, see that list of locations, dates, times that would work best for you, and make sure that you get signed up. You can also call. If you'd rather register that way, you can call 800-240-8981. That's 800-240-8981. As we've talked about this shutdown today, we talked about other events that have affected the market. I keep going back to the one thing that you guys always focus on, and that comes down to planning, doesn't it?
It does. Education and planning. And I'm glad for those who chose to stick around. The solution. So first, again, as we get into this segment, I think it's important to point out we are a national charity. We've been teaching these 8-hour, almost master level courses at major universities and colleges for almost a decade and a half now. We've taught tens of thousands of people, hundreds of thousands of people consume our white papers and webinars. We've done this for a long time, teaching those typically $1 to $20 million families how to find, and I mean, that's the last section of the 8-hour course we spend. How do you choose a team? How do you do background checks? How do they get paid? How do you know what hat they're wearing when you're meeting with them? Is it the insurance sales hat? Is it the broker hat? Is it the fiduciary hat? What do the disclosures mean? We give you inside the industry. We lift the hood, show you all of the good, the bad, and the ugly, literally. And the course is really centered around, if someone wants to better understand what the course is centered around, on our charity's website, there is a webinar called The Sample Plan. And it's about a 40 minute webinar that goes high level, taking you through a comprehensive retirement plan with all the risk mitigations. And again, it's high level. That plan that we show on the charity's website, and I would encourage you to go to the charity's refedu.org, refedu.org. Go check out that webinar, and it'll give you an idea. We're going to teach you in 8 hours all the levers to determine how to construct that plan and all the risk mitigations, because in that plan is a 64 or 65-year-old couple taking 8% withdrawal rates, and that plan can't break. It has risk mitigation against long-term care. It has risk mitigation against great recessions, major market events. You never outlive your income. Risk mitigation against one spouse dying early, and mitigating the trap when one spouse dies early of not only the replacement of income, but as important, I wouldn't say more important, as important is the tax implications. And it's massive. When the first spouse dies, you go from married filing joint to single. Many of our listeners right now who will be in a 22% tax bracket in retirement will jump 2 brackets when the first spouse dies to 32%. Medicare will pop way up over $500 a month. There's traps, and we teach you all the risk mitigation of what it looks like to do the hundreds of iterations modeling different outcomes to produce the most efficient retirement plan possible. And it's being taught to you not so that you can go try to do it, because you're not going to do it. I'm just telling you, I don't care who you are. I mean, we got econ professors, we got nuclear physicists, we've got CFOs for Fortune 500 companies, we've got CFAs in this industry that have been through our classes. They can't do it themselves. You're not going to do it yourself as you're aging, but you can know how to find the right teams and tell them what you want and to ask the right questions. Are the right levers in here to produce the best outcomes for me? And do I understand them so that when we have 8 major market events on average through an average retirement, 8 times you're going to have a major market event. Historically speaking, that's how frequent it will happen. Will you be able to not panic? Will you be able to make good decisions and continue to spend and go on vacations and take your families on vacations and do all the things that you would ever do no matter what was going on around you? By the way, that's control right there. What I just described, you could have chaos going around everywhere around you in markets and political, geopolitical, and you're still living your best life. That's control. And that's what the class teaches, Paul.
You stole my thunder.
I'm sorry.
I swear to God, I was just about to say what you said.
See, your psychological training, your psychology training.
You become a psychologist. Scares me.
Not
But, you know,
quite.
it's really, when you boil all of this down to its key ingredients, everybody who ends up in retirement, they all want one thing, right? We all want one thing. We want to enjoy that time that we have, which we never know how long it's going to be, and feel like we have control because so many things we start losing control over, right? The one thing we want to have control over is our retirement. So the reality of retirement planning, it's not about money. Yes, it's about money, but really it's about freedom. It's about being able to enjoy your life. And it's about, like, as you said, there's going to be chaos around you. People are going to pass away. Your health may decline. The stock market may crash. Someone gets elected you don't like. The government may shut down. There's going to be chaos around you. But as long as you have control over your retirement plan, as long as you have a plan that guides you, at least you've taken back that control. It's exactly right, Kirk. You said it perfectly.
Paul, chaos, no one will be able to escape it because with TV, media, everything else, that sells. So your whole retirement, you're going to be dealing with noise, chaotic noise. And you better be able to tune that out when it comes to your finances and money and your lifestyle. So if you want that, start by educating yourself. Go to an 8-hour, almost master's level course taught at major universities and colleges. If you'd like to register, we ask a $29 donation to charity. Go to retirementplanningedu.org. That's retirementplanningedu.org.
Retirement Education Foundation is a fiscally sponsored program of United Charitable, a registered 501c3 public charity. Investing involves risk, including the potential loss of principal. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Retirement Education Foundation is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Retirement Education Foundation is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Retirement Education Foundation. This radio show is paid for by the Retirement Education Foundation, a charitable program.